New traders are looking for ready-made strategies. Professionals build their own. I view the trading plan as your personal guide. It tells you when to enter and when to exit and on what criteria, and generally how your entire trading process works. The idea is to have a script to follow, which in turn creates consistency in your trading. Because then and only then, when you as a trader acts consistently in your process and how you actually make decisions, can you really rely on the data that you are producing. And when you have actual data from your own trading, you have everything you need to know about yourself as a trader and your system right in front of you. You can see what works and what doesn't, what needs tweaking, and what you have to do more of. Trading is an endless process of improving and becoming better. The day you stop growing, you start dying. Now I'm going to show you my trading strategy template, which I use to build strategies upon. So here are the contents of a complete trading strategy. And the goal of this is to gain complete clarity on what to do and when to do something. And of course, when to sit on your hands, which actually is equally as important for a trader. You gotta know when to act and when to, stay put. So first of all, before we dive into this list, I think it's very important to understand that a very easy way to build a trading strategy is to think about it as a list of if-then statements, which is actually something I learned from Mike Bellafiore a couple of years ago. And the way that I use the if-then statements is like this. If this happens, then I will do this. And if this happens, then I do this, and so on. It gives you clear perspective and clear directions actually on how to act when you are not in a trade, and also how to act when you're actually in the trade. So you need plans for both. Here are the points that I believe and think is important to cover in your trading strategy. How to determine direction. When to enter, what is the signal? Should you scale into the trade or scale out of the trade, or should you enter with full size right away? When and how to exit, and of course, how much to risk and when. Now, for your entire process, you probably want to incorporate some kind of process, like your daily routine. This is what you do before you trade. This is what you do during your session, and this is what you do after. And journaling should be a part of all of those three, if you ask me. So a very easy example of a trading plan would be something like this. Build a daily thesis or trading idea with the help of bigger time frames. Then have if-then statements for daily ideas. If this happens, then I will. Entry if X happens, and lot size or how to scale into out of the trade. And of course, last, exit if or. That is an example of how a trading plan may look like. Now, I understand there are thousands of ways to build a trading plan, but this is the way that I ultimately ended up on, which have helped me a lot when it comes to clarity, how to build a process that is actually possible to follow, and that actually can create consistency in what I do. If you follow if-then statements in all trades, you know what to do and when to do it, and you can make sure that your quality is very even. You can make sure that you do high quality work because you have something that you can actually follow up in each decision. Now, this example, of course, is just that, an example. You shouldn't copy and paste it because it's not complete in any meaning. You need to create a plan that resonates with what you know, how you trade, and what kind of trader that you are. It has to resonate with you and your talent. The whole idea with a plan is to know personally exactly what to do and when. And when you try to copy and paste someone else, it simply doesn't work like that. You can definitely use this as some sort of template, right? It can guide you what kind of points you need to incorporate in your trading plan. But after that, it has to be up to you. What kind of entry do you do, right? When do you enter? When do you scale I mean, into the trade? When do you add size? And when do you exit? All of that has to come from you. If you ever experience insecurities in your daily trading process, it simply means that you have to build a more clear plan for yourself. You need to work on your plan. That is what it means, nothing else. And to be very frank here, guys, most traders lack a clear trading plan. They don't understand the importance of having clear directions on what to do, a personal guide, if you will, for yourself. And I'm telling you, it is definitely the key ingredient. So don't be like most traders. And when you actually have created your first trading plan, don't just fund a trading account and start trading. Be smarter. Start testing it in your trading simulator. Test it until it works, then do demo trading for a couple of months to make sure that you can balance everything in your daily life. And of course, test your psyche a bit. That's also something that demo trading is good for. So this template should give you an idea of how I build my trading systems, and of course, how you can build your own. This is by no means the only way, or I don't know if it's the best way. It has been the best way for me, so maybe it can help you as well. And as always, guys, the other key ingredient of becoming a good day trader is to work on yourself every day. And a part of that is journaling. So keeping a pen and paper handy is definitely important, and I don't think that you can succeed in this craft without it. So keeping your daily trading journal alongside your personal development journal is what you need to do. It doesn't really matter if you use pen and paper or keep some kind of digital form of your journal, but the point here is that you need to keep your journal. You need to document what works, what doesn't, your mistakes, so you can make sure that you learn from your mistakes, because most people actually end up doing the same mistake over and over, and at times they may have days where they actually don't make their common mistakes, and they will see that period of time as a good trading period, right? And then of course they do the same mistakes that they always do. They make impulsive decisions, they revenge trade or whatever. So that's why you really need to take that part serious. Okay, you need to journal, you need to be very self-aware of what you do and what you don't do so you can fix it. See you soon, guys.